Welcome to another video about alter altitudes. Today I'm going to be covering budgeting concepts for 1099 workers, really anyone who's self-employed and has 1099 income where an employer is not responsible for their benefits. The issue that I typically see when advising for 1099 workers is that we see ourselves as business owners, but we don't treat the income that we have as business income. We treat it like it's personal income. We're going to tackle a few topics in this video as it centers around how to budget for your cash flow. One of the things is that we're going to focus on in this conversation today is taxes. Then we're going to focus on maintaining a positive cash flow. And then once we tackle that topic, we're then going to look at revenue targets. One of the big misconceptions that I see self-employed individuals makes is this belief that it's okay to just write off a bunch of expenses to lower their taxes. It makes purchasing a home difficult. It makes opening up lines of credit very difficult. It makes doing things like buying a car very difficult when we look like we don't have any money. So taxes aren't necessarily a bad thing. There are creative things that we can do to control our taxes without writing off a whole bunch of money. Okay. So number one, budget for taxes. When it comes to your revenue, you want to be budgeting to be able to pay your taxes. In another video, I'm going to go deeper into the tax treatment of self-employed income. To prepare ourselves for taxes, we have to understand our revenue and our revenue sources. Whether you're a real estate agent, an insurance agent, a consultant, you're going to have something known as a gross commission. After your gross commission, you're going to have some expenses, something that is withheld from that gross commission. So we're going to call this gross expenses. After your gross operating expense, you're going to have something called net operating income. Oftentimes, as self-employed, we feel like this is our income, but that's not your income, okay? So in the gross operating expenses, you're going to have something like dealer commissions. You're going to have something like you may have be statutory W-2, where there may be some withholdings, but not all withholdings. Things of that nature are going to be your gross operating expenses. So once you subtract that, you have your net operating income. From there, you're going to have your regular business expenses. If you're in real estate, this may be MLS fees. It may be errors and omission insurances. It may be whatever you need to operate your business. So now we're going to subtract our business expenses. And when you're doing this, I want you to consider your actual business expenses, not the things that you write off because you can, because you're 1099, your actual business expense. And then from here, you're going to have net income. And by net income, I mean your net business income. As a self-employed person, you can multiply this by 92.35%. After that, that's what you're getting taxed on, okay? So now you have your net taxable income, okay? So now we haven't even gotten to the income you get to take home to your family yet, and we've already paid operating expenses, business expenses, taxes to the government. We need to factor that in early to get us to where we want to go. So let's assume that for the sake of round numbers, and again, I'll release a video that goes deeper into detail on how we calculate some of these numbers, but for now, let's just call it minus 25%. So now we're going to have net take-home income. Okay. All right. So now we're done with taxes. Actually, we just hit maintaining positive cash flow too. Now let's talk about how to set up your revenue targets. we now want to start budgeting for what do you need to take home. Let's say that you need $7,000 a month of take home income. And let's say you need this to come into the household and pay all of your bills. We need to subtract this 25% from 100. Okay, and that's going to give us 75. So we need to take that 7,000 and we need to divide that by 75%. And we're going to round that up to $9,400. Okay, we're going to divide that 9,400 by 0.9235, which is $10,178.67. This is what we need to make after our business expenses and our gross operating expenses. So on a monthly basis, let's say our goal is to bring in $10,200. Now, if you know your business expenses, we can add that to this number. Let's add $750 to that number. So now we need to bring in 10,950, and let's say that there's a percentage or some type of cut that you're getting to a managing director, a managing broker, something. You want to add that to this number. And let's say that of that $10,000, they're going to get, I don't know, 5% of that. And so that means that you need to make their 5% that they're taking. Okay, which means you need to bring in $11,526.31 per month. So hopefully this was beneficial in just helping you understand how to calculate the amount of money you need to bring in order to have the amount of money you want to take home to your family. And with that information, we've now tackled setting our revenue targets. The next step is to figure out, depending on what business you're in, what kind of activity you need to do in order to accomplish that number. This has been Alter Altitudes. Hopefully this video helps you. If you like it, go ahead and give it a thumbs up. Don't forget to hit the bell icon to subscribe so that you can be notified whenever I post new content. This has been Alter Altitudes, and remember, the only limits that you have are the ones that you put on yourself.